I have made and lost several fortunes in trading. And I can tell you, with the certainty of a man who has stood on both sides of that truth, that almost none of my losses came from being wrong about the market. Almost all of them came from refusing to accept that I was. The market does not punish stupidity. Not primarily. The market punishes pride. And the most dangerous trader in any room, in any era, in any market, is not the one who doesn't know enough. It is the one who cannot bear to be wrong. You know this trader. You may have watched him from the outside, holding a position long past reason, adding to a loss, telling himself the market will come back, refusing to take the exit that was right in front of him. Or perhaps you know him from the inside. Perhaps you are him. And if that lands somewhere uncomfortable, good. Because what I'm about to tell you is not market theory. It is not a technical framework. It is not a strategy that will make you a better trader next week. It is the truth about the one enemy every trader carries into every single trade they ever take. And that enemy wears your face. Let me describe something to you. A trader enters a position. The analysis is sound. The setup is clean. The thesis is logical. Everything he has studied, everything he believes about the market, points in one direction. And then price begins to move against him. Not dramatically, not catastrophically, just against him. In that moment, something happens that has nothing to do with the market. The trader's identity becomes tangled with the trade. The trade is no longer just a trade. It is proof of something, proof that he is skilled, that his analysis was correct, that he understands the market well enough to have a future in it. And so when the market moves against him, it is not just a position that feels threatened. It is him. And the moment that happens, the moment ego enters a trade, he is no longer making decisions based on what the market is doing. He is making decisions based on what he needs to be true. He needs the trade to come back. He needs the analysis to be validated. He needs to be right. And that need, that quiet, invisible, powerful need, is what keeps him in a losing trade past all reason. It is what makes him move his stop, add to the position, tell himself the market is simply taking longer than expected. I have watched brilliant men destroyed by this mechanism. Men who understood markets better than almost anyone alive. Men with decades of experience and real insight. Men who were right about the big picture, right about the trend, right about everything, and still lost everything because they could not be wrong in the moment. Here is what I learned, and it cost me more than I care to admit to learn it. The market does not care what you need to be true. It will move where it moves, based on forces that have nothing to do with your analysis, your identity, or your reputation. And if you cannot separate yourself from the trade, if your ego is inside the position, you have already lost. You just don't know it yet. Now, let me tell you something that will challenge everything most traders believe about what it means to be good at this. The traders who make the most money are not the ones who are right the most often. They're the ones who are wrong quickly. Read that again, because it sounds simple and it is not simple at all. The greatest competitive edge in trading is not the ability to predict correctly. It is the ability to accept being wrong, without it meaning anything about you. Most traders believe their win rate determines their skill. They feel good when they're right and shaken when they're wrong. Every loss is a small wound to their confidence. Every winning streak feels like evidence that they've finally figured it out. But professional traders, the ones who survived decades in this game, they have developed something that looks from the outside like coldness. It is not coldness. It is freedom. Freedom from a need to be right on any individual trade. Because here is what they understand that most traders never grasp. A loss cut quickly is not a failure. A loss cut quickly is the system working. It is a trader saying, the market is telling me something I didn't expect. I am listening. That is not weakness. That is the highest form of market intelligence, the ability to take in new information without the ego blocking it. But most traders cannot do this. And the reason is not laziness. It is not lack of discipline in conventional sense. It is that they have made the worst possible trade without realizing it. They have traded their financial future for the feeling of being right. And the market, which cares nothing for feelings, extracts payment for that trade every single time. I want to tell you about a period in my trading life that I do not speak of often. not because it is painful, though it was, but because the lesson it contains is one I spent years believing I had already learned, and discovering I had not. I had been watching a particular market for months. I had studied it with the patience I had built over decades of trading. The trend was clear to me. The structure was there. The timing, I believed, was right. I was long, and I was certain the market moved against me, not violently, not in a way that obviously invalidated my thesis, just against me, slowly, quietly. The way the tide turns before you notice the water is at your ankles. And here's where the ego entered. I told myself the thesis was intact. The fundamentals hadn't changed. The market was simply giving me a better entry, testing the level before the real move. This language, remember this language, because traders use it constantly when they are not listening to the market. They are narrating the market, explaining away what the price is telling them with stories that protect their original position. Days passed. The position moved further against me. I held not, because my analysis of the higher time frame had changed. It had not. I held because somewhere beneath all the rational language, beneath the talk of fundamentals and structure and timing, I could not bear to be wrong. I had told people about this trade, my reputation, my self-image, my sense of myself as a man who understood markets. All of it had become entangled with the position. Cutting the trade meant more than taking a loss. It meant admitting something about myself that I was not ready to admit. The market eventually moved in my direction. My thesis was ultimately correct. But I want you to understand what the ego cost me during those weeks. It cost me capital I could have deployed elsewhere. It cost me the mental clarity to see other opportunities clearly. It cost me sleep and certainty and the calm that a disciplined trader needs to function. And most dangerously, it reinforced a habit. Because the trade eventually came good, my ego drew exactly the wrong lesson. See, I was right to hold. That is how the ego trap closes around you. It lets you survive. Sometimes it even lets you win. And in doing so, it teaches you to stay inside the trap next time, until the day the trade does not come back. And by then, the habit is fully formed. The reason ego is so dangerous in trading is that it never arrives wearing its own face. It always disguises itself as something reasonable. So let me show you the 3 masks ego wears in trading, and what it actually looks like from the inside when each one takes hold. The first mask, the unmovable stop. You place your stop at a level you determine before the trade. The market approaches it, and something happens. You move the stop, not because the structure has changed, not because new information has arrived, but because if the stop is hit, the loss becomes real. And if the loss becomes real, you were wrong. And being wrong means something you're not willing to face. So you give it just a little more room. You tell yourself you're being flexible, adapting to volatility. You are not being flexible. You are letting your ego rewrite your risk management in real time. And the stop that was supposed to protect you has become a negotiation, which means it is no longer a stop at all. The rule, your stop is commitment, not a suggestion. The moment you find yourself reasoning about moving it, stop reasoning and honor it. That impulse to move the stop is not wisdom. It is ego in its most recognizable form. The second mask, averaging down. The position moves against you, and instead of cutting it, you add to it. The logic sounds compelling. I like the trade at this price. I love it even more lower down. I'm improving my average. But ask yourself honestly, why are you adding? Is it because the structure has genuinely improved? Because new information has confirmed your thesis? Or is it because doubling down on the position is the only way your ego can frame the original loss as a strategy rather than mistake? Averaging down is the ego's most expensive trick, because it takes a manageable loss and turns it into an account-threatening position, all in service of not having to say, I was wrong to enter there. The rule, never add to a losing position to prove a point to yourself. Add only when the higher time frame structure explicitly presents a new entry, and even then, the original position must already be managed. The third mask, the revenge trade. You take a loss, a clean, properly managed loss. Stop hit, trade closed, process followed. And within an hour, you are back at the screen. Not because a valid setup has appeared, because something in you needs to get even, needs to win back what was lost, needs to prove that the loss was an anomaly and not a verdict. The market does not know you lost. It does not owe you a recovery. It will not cooperate with your need for redemption. And the trade you enter from that state, that wounded, reactive, ego-driven state, is entered without the one thing that makes a trade valid, a reason that has nothing to do with your feelings. The rule, after any loss, close the platform, walk away from the screen, not for a minute, for hours. Let the emotional charge dissipate completely before you assess whether another opportunity genuinely exists. Because the revenge trade is never about the market. It is always about you. I want to return to the story I began earlier, because the moment I have described, the position moving against me, the ego holding the trade open, it did not resolve cleanly. It built. There came a day when the position had moved so far against me that the loss was no longer abstract. It was real, significant, the kind of number that changes things. And on that day, I sat at my desk, and I had a conversation with myself that I believe every serious trader will eventually have. One voice said, "The thesis is still intact. The monthly structure has not broken. This is simply a deeper pullback than anticipated. Hold, you will be vindicated." And it was not a foolish voice. It was a voice that understood markets, that could point to structure and levels and historical precedent. But there was something underneath that voice, something that was not about the market at all. And when I was honest enough to look at it directly, when I stopped letting the rational language hide what was actually driving the decision, I saw it clearly. I was not holding because the trade was right. I was holding because I needed it to be right, because I had held this long. And taking the loss now meant accepting that every day I had held was a day I had been wrong. Every day I had told myself the thesis was intact. The real reason I was still in the trade was not analysis. It was pride. I closed the trade. It was one of the hardest decisions I made in my career. Not because the financial loss was the largest I had experienced. It was not, but because in closing it, I had to look at myself clearly. I had to say, "Jesse, you stayed in this trade for your ego, not for your edge." The market, as it often does, eventually moved in the direction I had originally predicted. My thesis was correct. But here's what I understood in the weeks that followed, with a clarity I had never quite reached before. Being right about the direction had never been the question. The question was whether I could follow my system when my ego was screaming at me to override it. And for too long, the answer had been no. The day I closed that trade, at a loss, with the thesis still potentially valid, was the day I finally began to trade professionally. Not because I stopped being wrong, because I stopped needing to not be. There's a trade that most traders never think about. Not a setup on a chart, not a position in a market, a trade you make with yourself. And it is the most important trade you will ever take. On one side of this trade is the version of you that needs to be right, that entered this game to prove something, that measures your skill by your win rate, your intelligence by how often you call the direction correctly, your identity by whether the market validates your analysis. That version of you is expensive to maintain, very expensive. On the other side is the version of you that is willing to be wrong, quickly, cleanly, and without it meaning anything beyond the immediate financial fact of the loss. That version of you is not less confident, not less intelligent, not less skilled. That version of you is free. Free from a need to hold a losing trade past reason. Free from a need to move the stop and pretend you didn't. Free from a need to revenge trade after a loss to restore something that never needed restoring. Free from a need to prove anything to the market because you know the market doesn't care and you have made peace with that. That freedom, that specific, hard-won psychological freedom, is what the best traders I have known all shared. Not the brightest, not the best analysts, not the most technically sophisticated, the freest, the ones who could sit in a loss, assess it clearly, cut without drama, and turn their attention to the next opportunity, as if the loss had never happened, not because they were cold or detached, but because they had made the trade with themselves. They had decided that being profitable mattered more than being right, and those are not the same thing. So I want to ask you something now. Not about your strategy, not about your entries or your exits or your time frames. Which version of you is sitting at that screen? The one that needs a trade to come back? Because if it doesn't, something about you is diminished, or the one that reads what the market is actually telling you, honestly, without defense, and acts accordingly? Because one of those traders has a future in this game, and the other is simply paying the market to protect his pride. I have spent a lifetime in these markets. I have made fortunes and lost them. I have been celebrated and humiliated. I have been right when it cost me nothing and wrong at the worst possible moments. And if I could reach back through all those years, through all the losses that didn't have to be as large as they were, through all the trades held too long, all the stops moved for the wrong reasons, all the revenge entries made in wounded pride, there is one thing I would say to the younger version of myself. The market is not your opponent. It is your mirror. Every trade you take reflects something back at you, your discipline or your impulsiveness, your patience or your desperation, your willingness to be wrong or your inability to face it. And the traders who last, the ones who are still here decades later, who have survived the crashes and the manias and the slow grind to test everything you have, they learn to look at that reflection honestly. They learn that the ego is not the enemy of profit because it makes them feel too good about themselves. It is the enemy of profit because it makes being right more important than making money. And in a game where the only scorecard that matters is your account balance, that is a fatal confusion. So here is what I want you to do. Go back to your last 5 losing trades, not to analyze the entries, not to review the structure or the time frames. Ask one question about each of them. Did I exit when the market told me to, or when my ego finally allowed me to? Be honest, completely, uncomfortably honest. Because in that answer, across those 5 trades, you will find the shape of your ego's fingerprints on your trading. And once you can see them clearly, you can begin to trade without them. Drop your answer in the comments. Not a strategy, not a setup. The honest answer to that question across your last losing trades. Because the traders who are willing to look at themselves that directly, those are the traders who change. The market has been trying to teach you this for a long time. It is time to listen.